Question 1. Types of long-term care services. Which of the following services is NOT typically covered under most long-term care insurance policies? A. Home health care services provided by registered nurses. B. Personal care assistance for daily living activities. C. Custodial care in a nursing home. D. Experimental treatments for Alzheimer's disease. Answer D. Experimental treatments for Alzheimer's disease. Explanation. Long-term care insurance (LTI) is designed to cover a range of services that help individuals with the activities of daily living adults as they age or face chronic illness. Typically, these services include home health care, personal care assistance, and custodial care in nursing homes. However, experimental treatments, such as those for Alzheimer's disease, are generally not covered by LTCI policies because they do not meet the criteria of established care options that the insurance is designed to support. According to Indiana regulations, LTCI policies must outline the specific services covered, which often excludes experimental procedures. Question 2. Policyholder rights and protections. Which of the following is a requirement under Indiana state regulations for long-term care insurance providers? A. They must offer unlimited lifetime coverage for all policyholders. B. They are required to provide a 30-day free look period for new policyholders. C. They must guarantee a 10% annual return on premiums paid. D. They can charge higher premiums for policyholders over 70 years old without justification. Answer. B. They are required to provide a 30-day free look period for new policyholders. Explanation. Indiana state regulations stipulate that long-term care insurance providers must offer a free look period of at least 30 days. During this time, policyholders can review the policy and cancel it for a full refund if they are not satisfied. This consumer protection measure is designed to allow individuals to make informed decisions about their coverage. The other options are incorrect. Unlimited lifetime coverage is not a requirement. Guaranteed returns on premiums are not standard, and charging higher premiums for older policyholders without justification violates fair underwriting practices outlined by Indiana's insurance regulations. Question 3. Scenario-based question. Mr. Thompson is a 68-year-old retiree who has recently purchased a long-term care insurance policy. He is considering whether to utilize some home health care services as he has difficulty with mobility. What should Mr. Thompson do first to ensure he receives the benefits of his policy for these services? They immediately hire a home health aide and submit the bill to his insurance provider. B. Review the specific terms and conditions of his long-term care insurance policy regarding home health care coverage. C. Call his insurance agent to request a list of approved home health care providers. D. Wait for his condition to worsen before seeking home health care services. Answer. B. Review the specific terms and conditions of his long-term care insurance policy regarding home health care coverage. Explanation. Before utilizing any long-term care services, it is essential for Mr. Thompson to review the specific terms and conditions of his long-term care insurance policy. Policies often have particular requirements for coverage, such as the types of services covered, eligibility criteria, and any potential limitations like a waiting or elimination period. Understanding these details will help him ensure that he complies with his policy's requirements, preventing any potential issues with claim denials. Hiring a provider or submitting bills without this knowledge could lead to unnecessary expenses or misunderstandings about coverage. In Indiana, the Department of Insurance emphasizes the importance of policyholders understanding their coverage to maximize benefits effectively. Question 4. Fundamental concepts. Which of the following best describes the primary purpose of long-term care insurance? A. To cover short-term medical expenses incurred during hospitalization. B. To provide financial assistance for long-term custodial and personal care services. C. To guarantee a cash benefit for funeral expenses upon death. D. To reimburse policyholders for acute care costs associated with chronic illnesses. Answer. B. To provide financial assistance for long-term custodial and personal care services. Explanation. The primary purpose of long-term care insurance (LTCI) is to provide financial assistance for long-term custodial and personal care services which help individuals with activities of daily living adults such as bathing, dressing, and eating. LTCI is specifically designed to cover costs associated with chronic illnesses or disabilities that require extended care rather than short-term medical expenses or funeral costs. Understanding this distinction is essential for potential policyholders when considering the type of insurance they need to safeguard against the costs associated with long-term care. Question 5. LTC insurance policies. What is a common feature found in long-term care insurance policies that protects policyholders against inflation? A. Daily benefit caps. B. Elimination periods. C. Inflation protection riders. D. Guaranteed renewable clauses. Answer: C. Inflation protection riders. Explanation: inflation protection riders are a common feature in long-term care insurance policies designed to protect the value of benefits over time. These riders increase the policy's benefit amounts periodically to keep up with inflation, ensuring that the coverage maintains its purchasing power as costs rise. Daily benefit caps and elimination periods do not specifically address inflation, while guaranteed renewable clauses ensure that a policy remains in force as long as premiums are paid but do not adjust benefit amounts for inflation. Understanding the importance of inflation protection is crucial for consumers to ensure adequate coverage in the future. Question 6. Indiana state regulations. Under Indiana law, which of the following is a mandatory disclosure requirement for long-term care insurance providers? A. The maximum number of years the policy can remain active. B. The conditions under which the policy may be cancelled or non-renewed. C. A detailed list of all excluded services. D. The insurer's financial ratings from independent rating agencies. Answer: B. The conditions under which the policy may be cancelled or non-renewed. Explanation: Indiana law requires long-term care insurance providers to disclose the conditions under which a policy may be cancelled or non-renewed. This ensures that policyholders are fully aware of their rights and the circumstances that might affect their coverage continuity. While excluding certain services is important, it is not as critical as understanding the cancellation or non-renewal conditions. The maximum number of years the policy can remain active is not typically disclosed, nor is there a requirement for insurers to provide their financial ratings. Transparency in these conditions is essential for consumer protection in the state. Question 7. Consumer considerations. Which factor is least likely to influence a consumer's decision to purchase long-term care insurance? A. Family history of chronic illness or disability. B. Current financial stability and income. C. The availability of home care services in the community. D. The color of the policy document cover. Answer: D. The color of the policy document cover. Explanation: the color of the policy document cover is least likely to influence a consumer's decision to purchase long-term care insurance. In contrast, significant factors such as family history of chronic illness, current financial stability, and the availability of home care services play crucial roles in the decision-making process. Consumers often consider their personal and familial health risks, their financial ability to pay for premiums, and the local services available when assessing their long-term care needs. The psychological aspect of branding, such as color, does not carry weight compared to these more substantial considerations. Question 8. Practical applications. In the event that a long-term care insurance policyholder is denied benefits, what is the first step they should take to address the denial? A. Immediately seek legal action against the insurer. B. Contact the state insurance department for guidance. C. Review the policy and the reason for denial. D. Change insurers to avoid future issues. Answer: C. Review the policy and the reason for denial. Explanation: the first step a policyholder should take when facing a denial of benefits is to review their long-term care insurance policy and understand the specific reasons for the denial. This review will help them identify if the denial was due to a misunderstanding, an error in the claim process, or a legitimate reason based on the policy's terms. Once they have clarity on the issue, they can then contact their insurance provider to discuss the denial or escalate the matter if needed. Seeking legal action or contacting the state insurance department should be secondary steps after understanding the situation. Changing insurers does not address the current issue and may lead to similar problems with a new policy. Question 9. Current issues and trends in long-term care. What is one significant impact of the COVID-19 pandemic on long-term care insurance? A. Increased availability of long-term care services nationwide. B. Heightened scrutiny and reform in long-term care regulations. C. Decrease in the number of individuals seeking long-term care. D. Lower premium costs for long-term care insurance policies. Answer: B. Heightened scrutiny and reform in long-term care regulations. Explanation: the COVID-19 pandemic has led to heightened scrutiny and reform in long-term care regulations as states, including Indiana, assess the preparedness and response of long-term care facilities. The pandemic highlighted vulnerabilities within these systems, prompting lawmakers and regulatory bodies to seek reforms to enhance safety and quality of care. While some may perceive increased demand for services, many individuals deferred care due to pandemic-related fears. The pandemic did not result in lower premiums. In fact, many insurers may increase premiums in response to the evolving landscape of long-term care needs and risks. Understanding these trends is essential for stakeholders involved in long-term care planning and policy development. Question 10. Ethical considerations in long-term care decisions. In a situation where an elderly person with dementia refuses care, what ethical principles should guide the family's decision-making? A. Autonomy. Respecting the individual's right to make their own decisions. B. Beneficence. Acting in the best interest of the individual. C. Non-maleficence. Avoiding harm to the individual. D. Justice. Ensuring fair treatment and resources for all individuals. Answer A. Autonomy. Respecting the individual's right to make their own decisions. Explanation. In cases where an elderly person with dementia refuses care, the ethical principle of autonomy should guide family decision-making. This principle emphasizes the importance of respecting an individual's right to make their own decisions, even when they may not seem rational to others. However, it is crucial to balance this with the principles of beneficence, acting in the best interest of the individual, and non-maleficence, avoiding harm. Families must consider the individual's capacity to understand the implications of their decision, and if the person is deemed incapable, family members may have to act in a way that aligns with the best interests of the individual, potentially overriding their expressed wishes while seeking the least restrictive alternative. Balancing these principles is a key aspect of ethical decision-making in long-term care situations. Question 11. Types of long-term care services. Which of the following best describes the primary difference between assisted living and nursing home care? A. Assisted living provides more extensive medical care than nursing home care. B. Nursing home care focuses on rehabilitation while assisted living focuses on independent living. C. Assisted living is generally less expensive than nursing home care. D. Nursing home care is designed for those who require assistance with activities of daily living, adults, while assisted living typically supports individuals with more independence. Answer. D. Nursing home care is designed for those who require assistance with activities of daily living, adults, while assisted living typically supports individuals with more independence. Explanation. The primary difference lies in the level of care and independence offered. Nursing homes provide comprehensive care for individuals who need significant assistance with activities of daily living, adults, and often have complex medical needs. In contrast, assisted living facilities cater to individuals who are more independent but still require some assistance with daily activities. Understanding these distinctions is essential for consumers when evaluating options for long-term care and determining the most appropriate setting based on individual needs. Question 12. Policy components. In long-term care insurance policies, what is meant by the elimination period? A. The time it takes to process a claim for benefits. B. The period during which a policyholder can cancel the policy without penalty. C. The waiting period before benefits are payable after a claim is filed. D. The maximum time a policy can provide benefits. Answer. C. The waiting period before benefits are payable after a claim is filed. Explanation. The elimination period, often referred to as the waiting period, is the time frame during which a policyholder must wait before benefits become payable after filing a claim. This period can vary between policies and typically ranges from 30 days to several months. Understanding the elimination period is crucial for policyholders as it affects their financial planning and the timing of when they can expect to receive benefits after needing care. Question 13. Licensing requirements. Under Indiana regulations, which of the following is not a requirement for long-term care insurance providers? A. Must have a valid license from the Indiana Department of Insurance. B. Must maintain a minimum level of reserves for policyholder claims. C. Must provide annual training for all insurance agents on long-term care products. D. Must comply with federal regulations concerning privacy and confidentiality. Answer. C. Must provide annual training for all insurance agents on long-term care products. Explanation. While insurance providers must comply with various regulations, there is no specific mandate requiring them to provide annual training for all agents on long-term care products. Licensing, maintaining reserves for claims, and adhering to federal regulations related to privacy such as HIPAA are essential requirements. Understanding regulatory obligations helps consumers choose reputable providers while ensuring compliance with state laws. Question 14. Rights and protections. What right does a long-term care insurance policyholder have regarding policy cancellation? A. They can cancel the policy at any time without notification. B. They are entitled to a full refund of premiums if cancelled within the first 30 days. C. They must provide written notice at least 60 days before cancellation. D. They lose all accrued benefits upon cancellation. Answer: B. They are entitled to a full refund of premiums if cancelled within the first 30 days. Explanation: in Indiana, policyholders typically have the right to cancel their long-term care insurance policy within the first 30 days and receive a full refund of any premiums paid. This is known as a free look period, allowing consumers to review the policy and ensure it meets their needs before committing financially. Policies may specify different cancellation terms and procedures, but consumers should always be aware of their rights regarding cancellations to avoid losing money or benefits. Question 15. Claim filing process. When filing a claim for long-term care insurance benefits, what is the most critical document that the policyholder must submit? A. Proof of age and identity. B. Medical records and documentation of the need for care. C. A copy of the policy document. D. A written request for reimbursement. Answer: B. Medical records and documentation of the need for care. Explanation: the most critical document for filing a claim is the medical records and documentation that substantiate the policyholder's need for care. Insurers require this information to determine eligibility for benefits and to assess the validity of the claim. While proof of age, the policy document, and a reimbursement request are important, the primary focus is on demonstrating the necessity for long-term care services as outlined in the policy's coverage terms. Question 16. Coordination of benefits. If a policyholder has both long-term care insurance and Medicaid, how should they proceed when seeking benefits? A. They should use only the long-term care insurance policy to avoid complications with Medicaid. B. They should coordinate benefits to ensure that both sources cover eligible expenses appropriately. C. They must exhaust all long-term care insurance benefits before applying for Medicaid. D. They can choose to apply for either benefit but must disclose the existence of both policies. Correct answer: B. They should coordinate benefits to ensure that both sources cover eligible expenses appropriately. Explanation: when a policyholder has both long-term care insurance and Medicaid, it is crucial to coordinate benefits effectively. Policyholders can utilize their long-term care insurance to cover eligible expenses, while Medicaid can supplement those benefits once the insurance policy limits are reached. This coordination ensures that the policyholder maximizes their available benefits and minimizes out-of-pocket expenses. It's essential for policyholders to understand how both programs interact to plan their long-term care financing effectively. Question 17. Consumer considerations. Which of the following factors should NOT be considered during a needs assessment for long-term care insurance? A. The individual's current health status and medical history. B. The family's financial resources and income level. C. The availability of family caregivers. D. The color of the insurance policy brochure. Answer: D. The color of the insurance policy brochure. Explanation: during a needs assessment for long-term care insurance, factors such as current health status, family financial resources, and the availability of family caregivers are crucial in determining the appropriate level of coverage and care needs. However, the color of the insurance policy brochure has no relevance to the assessment process. Understanding what factors are critical allows consumers to make informed decisions regarding their long-term care planning. Question 18. Theoretical knowledge. What demographic trend significantly impacts the demand for long-term care insurance? A. Decreasing life expectancy rates. B. Increasing birth rates. C. An aging population with longer lifespans. D. Higher employment rates among young adults. Answer: C. An aging population with longer lifespans. Explanation: the aging population with longer lifespans significantly impacts the demand for long-term care insurance. As people live longer, they are more likely to require long-term care services at some point in their lives, leading to increased awareness and need for insurance products that can cover these expenses. Understanding demographic trends is essential for insurance professionals and consumers alike, as it helps inform policy design and marketing strategies for long-term care insurance. Question 19. Problem-solving skills. Mr. Thompson is 75 years old and has recently been diagnosed with early-stage dementia. He is considering purchasing long-term care insurance. What should be his primary consideration before purchasing a policy? A. The insurer's advertising and marketing materials. B. The waiting period before coverage begins. C. His current health status and the impact on premium rates. D. The amount of paperwork required to apply. Answer: C. His current health status and the impact on premium rates. Explanation: Mr. Thompson's primary consideration should be his current health status and how it will impact the premium rates for long-term care insurance. Since he has been diagnosed with early-stage dementia, he may face higher premiums or may be denied coverage altogether due to pre-existing conditions. Understanding how health status influences both eligibility and pricing is critical for consumers making informed decisions about long-term care planning. Question 20. Current issues and trends in long-term care. What is one potential consequence of emerging technologies in long-term care? A. Decreased reliance on family caregivers. B. Higher costs associated with long-term care. C. Improved accessibility and efficiency of care delivery. D. Reduced quality of personal interactions in care settings. Answer: C. Improved accessibility and efficiency of care delivery. Explanation: Emerging technologies in long-term care have the potential to improve accessibility and efficiency of care delivery significantly. Innovations such as telehealth services, remote monitoring, and electronic health records can enhance communication between providers and patients, streamline care processes, and allow for more timely interventions. While there may be concerns about costs and personal interactions, the overarching trend is toward leveraging technology to improve care outcomes and accessibility for individuals needing long-term support. Understanding these advancements is crucial for consumers and industry professionals alike. Question 21. Benefit triggers. Which of the following best defines a benefit trigger a long-term care insurance policy? A. The date when the policy becomes active. B. A specified event that must occur for benefits to be payable. C. The maximum amount of benefits payable under the policy. D. A policyholder's request for an increase in coverage. Answer: B. A specified event that must occur for benefits to be payable. Explanation: A benefit trigger is a specific event or condition that must occur for a policyholder to access benefits under their long-term care insurance policy. Common benefit triggers include the inability to perform certain activities of daily living, adults, or a cognitive impairment diagnosis. Understanding these triggers is crucial for consumers as they determine when coverage will begin and how benefits are activated. Question 22. Underwriting process. In the context of long-term care insurance, what is the primary purpose of the underwriting process? A. To determine the initial premium rates. B. To evaluate the risk associated with insuring the applicant. C. To establish the maximum benefit amount. D. To outline the policy terms and conditions. Answer: B. To evaluate the risk associated with insuring the applicant. Explanation: The underwriting process is designed to evaluate the risk of insuring an applicant by assessing their health status, medical history, age, and other factors that may affect their likelihood of needing long-term care services. This evaluation ultimately influences the premium rates and terms of the policy. A thorough understanding of underwriting helps consumers navigate the application process and anticipate potential challenges based on their health profile. Question 23. Coverage limits. What is typically true about coverage limits in long-term care insurance policies? A. They are the same for every policy regardless of the insurer. B. They usually have a maximum dollar amount that can be claimed per day or month. C. They do not apply to benefits related to home care services. D. They can only be adjusted at the time of policy renewal. Answer: B. They usually have a maximum dollar amount that can be claimed per day or month. Explanation: Most long-term care insurance policies have coverage limits, which specify the maximum dollar amount that can be claimed for care per day or month. These limits help define the extent of coverage and determine the policyholder's financial responsibility. Understanding coverage limits is vital for consumers to ensure they select a policy that aligns with their anticipated long-term care needs and financial situation. Question 24. Inflation protection. Why is inflation protection an important feature in long-term care insurance policies? A. It guarantees a fixed premium throughout the policyholder's life. B. It ensures that benefits will increase over time to keep pace with rising healthcare costs. C. It allows policyholders to receive tax deductions on premiums paid. D. It enables the insurer to adjust the terms of the policy as needed. Answer: B. It ensures that benefits will increase over time to keep pace with rising healthcare costs. Explanation: inflation protection is a crucial feature that allows benefits to increase over time, helping to maintain their purchasing power in light of rising healthcare costs. Without inflation protection, policyholders may find that their benefits do not adequately cover the costs of care as they age. This feature is especially important in long-term planning, ensuring that individuals are financially prepared for future care expenses. Question 25. Tax implications. How are benefits received from a long-term care insurance policy typically taxed in Indiana? A. They are considered taxable income. B. They are fully tax exempt. C. They are subject to state income tax but exempt from federal tax. D. They are partially tax exempt, depending on the amount received. Answer: B. They are fully tax exempt. Explanation: in Indiana, benefits received from a long-term care insurance policy are generally considered tax-exempt, meaning policyholders do not have to pay income tax on the benefits they receive for qualifying long-term care services. This tax treatment can significantly impact the overall financial planning of individuals purchasing long-term care insurance, as it allows them to utilize their benefits without tax liabilities. Question 26. Renewability clauses. What is the primary purpose of a guaranteed renewability clause in long-term care insurance? A. To ensure that the insurer can increase premiums at any time. B. To guarantee that the policy will remain in effect regardless of the policyholder's health status. C. To allow the policyholder to receive higher benefits after a certain age. D. To limit the insurer's obligation to pay claims to the first 5 years. Answer: B. To guarantee that the policy will remain in effect regardless of the policyholder's health status. Explanation: a guaranteed renewability clause ensures that the long-term care insurance policy will remain in effect as long as premiums are paid, regardless of changes in the policyholder's health status. This feature provides peace of mind, as individuals with declining health cannot be denied renewal or coverage, making it a critical component for those seeking long-term care protection. Question 27. Market trends. What current trend is impacting the long-term care insurance market? A. Increased consumer demand for government-sponsored long-term care programs. B. A shift towards short-term care policies instead of traditional long-term care coverage. C. Greater emphasis on hybrid products combining life insurance and long-term care benefits. D. Decreasing awareness of the need for long-term care planning among consumers. Answer: C. Greater emphasis on hybrid products combining life insurance and long-term care benefits. Explanation: one significant trend in the long-term care insurance market is the growing emphasis on hybrid products that combine life insurance with long-term care benefits. These products offer flexibility, allowing policyholders to access funds for long-term care needs while providing a death benefit to beneficiaries if long-term care is not needed. This trend reflects consumers' preferences for integrated solutions that address multiple financial needs. Question 28. Policy exclusions. Which of the following is a common exclusion found in many long-term care insurance policies? A. Care provided in a skilled nursing facility. B. Care related to a pre-existing condition not disclosed during application. C. Respite care for family caregivers. D. Home modifications to accommodate a policyholder's needs. Answer: B. Care related to a pre-existing condition not disclosed during application. Explanation: many long-term care insurance policies include exclusions for care related to pre-existing conditions that were not disclosed during the application process. This means that if an applicant has a known health issue that is not mentioned when applying for coverage, the insurer may deny claims related to that condition. Understanding these exclusions is vital for consumers to ensure they are fully aware of the coverage limitations and potential gaps in their long-term care plans. Question 29. Long-term care settings. What type of facility primarily provides skilled nursing care to individuals who need 24-hour assistance? A. Assisted living facility. B. Nursing home. C. Adult day care center. D. Continuing care retirement community. Answer: B. Nursing home. Explanation: a nursing home primarily provides skilled nursing care and is designed for individuals who require 24-hour assistance due to significant medical needs or disabilities. Unlike assisted living facilities, which cater to more independent residents, nursing homes focus on providing comprehensive medical care, rehabilitation, and assistance with activities of daily living adults. Understanding the types of care settings helps consumers choose appropriate options based on their needs. Question 30. Consumer education. What is one of the primary goals of state regulations regarding long-term care insurance? A. To limit the number of insurance providers in the market. B. To ensure that consumers are adequately informed about policy options and protections. C. To standardize the premium rates across all insurers. D. To reduce the eligibility requirements for obtaining coverage. Answer: B. To ensure that consumers are adequately informed about policy options and protections. Explanation: one of the primary goals of state regulations surrounding long-term care insurance is to ensure that consumers are well informed about their policy options, protections, and rights. This includes providing clear information about coverage details, exclusions, premium rates, and the claims process. By promoting consumer education, states aim to empower individuals to make informed decisions about their long-term care planning and insurance needs.